Good morning, YouTubers. This is Crazy Horse. It's Monday, March 13th, about 8:30 in the morning, New York time. Is it Bank Run Monday? It's Monday, March 13th, about 8:30 in the morning, New York time. Is it Bank Run Monday? Well, we'll find out when the banks open in about an hour and a half, 2.5 hours, depending on where you are. And HSBC announced over the weekend, yesterday, that they'll be buying the UK arm of the collapsed Silicon Valley Bank for £1, apparently, and honoring all of their debts and commitments to you, the public. The Fed in the US has announced that they will honor all deposits in SVB in the US. So they're trying to avoid a bank run, but how's this going to spread to other banks? Let's take a look at that. Where we are right now is due to two things. One, the Fed has been printing money like there's no tomorrow for the last 10 years, and they've been doing this quantitative easing, pumping money into the US economy constantly. And that now they've decided to tighten that, and they're doing quantitative tightening, contracting the money supply, and that of course is causing interest rates to rise. And so SVB and other banks cannot meet their commitment.
And the number one root cause is that the money supply is contracting in America right now. As I showed you in my video on Friday, it's contracted by 2% year over year, the M2 money stock, which is the first time that's happened in 100 years. And the only other times money supply has ever contracted, we've had a depression and huge runs on banks. And so long as the Fed keeps doing their quantitative tightening program, which they've been doing the last 9 months, we are likely to continue to see the money supply contract. And what's crazy to me is that I've read all these articles this weekend about Silicon Valley Bank, and not a single article mentioned the money supply.
And so they can't reach those commitments because they can't raise money because the interest rate's too high, and so banks are failing. That's the reality. So is it going to continue tightening, causing the interest rates to rise and causing inflation to rise with it and causing all problems for all these banks. So if you're heading to the bank Monday morning to get your money out, that's probably a good idea. I've been taking money out for the last 6 months, keeping it in cash, putting it in gold, putting it in real estate. I sold my real estate, so I'm keeping my cash, I'm keeping my gold, and keeping it out of the bank. I've been taking money out of the bank for 6 months. So what's going to happen Monday morning? Everybody's going to go to the bank. Everybody's nervous. They're going to start taking their money out, which I've been recommending for 6 months. Put it into other assets. Put it into gold, silver, and I don't know what else. I mean, I sold out of my Bitcoin. That was looking a little too shaky right now. I sold out of the stock market. I think that's going to be dropping again. So where do you put your money? I guess you got to pull it out in cash, and hopefully inflation doesn't destroy your cash. But the banks are in trouble. The interest rates are hurting the banks. They can't make their commitments. And the second thing, besides quantitative tightening, the second thing that's destroying the economy right now, which probably you don't know about, is in March of 2020, during these emergency measures that the government in the US passed for the COVID emergency, they reduced the fractional banking reserve required for banks from 10% down to 0%. In my opinion, 10% is criminal to begin with, because if everybody goes to the bank to get their money out and they only have 10% of your money in the bank that you've loaned the bank, which is essentially what a deposit is, you can't get your money out. They lowered that requirement to 0%. So a bank takes in $1 million in loans, i.e. your deposits, and then invests $1 million into mortgage-backed securities or whatever else they want to invest in. And then the interest rates go up on their loans or on their investments, and they can't make the payments. And now they have 0% fractional reserve required by law. In other words, they have zero of your money, or the money you loaned to them when you deposit it in their bank. You think it's your money, it's not. Legally, it's their money, you loaned it to them, they owe you that money. If they go bankrupt, you're out of luck. You don't get your money back. It's not your money, it's their money. They are now required by law, due to the COVID emergency measures, to have zero of your money in the bank. 0%. That means you put in $100,000, $100, $1 million, they're required to hold zero of that. They can invest every penny of it. And And that's exactly what all the banks have done. I think there's a good reason people are nervous. I'd be nervous too. That's why I've been taking my money out of the bank. And are we going to see a bank run Monday morning in an hour and a half or 2.5 hours, whenever your banks open up in the U.S.? Let's see. Let's see what happens. It's maybe today will go down in history as Bank Run Monday, March 13th, 2023. This is Crazy Horse. Thanks for watching.